After workers embarked on a nationwide strike, leaders of the Nigeria Labour Congress and Trade Union Congress have reached a deal with the federal government to suspend their ongoing indefinite strike for 1 week. The NLC and TUC met with the federal government's delegation last night, where the secretary to the government of the federation assured that the minimum wage impasse will be sorted out within 1 week. Well, let's get the economic angle to this, and of course, all that has to do with the effect on the economy. I have joining me via Zoom the founder and managing director of Cowrie Assets Management Limited, Mr. Johnson Chukwu. Good afternoon, Mr. Johnson Chukwu. It's good to have you on Business Nigeria this afternoon.
Good afternoon, Tolu. Thank you for having me.
Yes, I'd like us to first start with the impact of industrial actions like this one on the entire economy. Yesterday, we saw the airports shut down. People could not move from place to place. And we can go on, banks and other institutions. But for private businesses, some people were able to, well, defer all of this. They went out for their businesses and, go out on their day-to-day activities. But what really can we do a summary of what this means for our economy when we have actions like this, say 24 hours, 48 hours?
Yes, Tolu, if I have to use a single sentence to explain what happens when a national industrial action of this size and magnitude take place, that it leads to, in single sentence, loss of productive man-hour. And what I mean by loss of productive man-hour, you just mentioned that airports were shut down. People who had businesses to do in different parts of the country couldn't move around to do that. The National Union of Oil and Gas Employees, or NUPEN, National Union of Petroleum and Natural Gas Workers, also went on strike. So there was no evacuation of petroleum products. So you saw some level of queue that also evolved yesterday. The national grid, the power grid, the electricity grid was shut down, which meant that people had to go to use generators to generate power in their homes and their offices. And for manufacturers, then they rely on some level of public power supply. They also had to rely on alternative energy sources. So schools were shut down in some locations like Abuja. Offices were shut down. So people couldn't produce much. In fact, the level of economic activity yesterday was at the lowest ebb. And that simply meant that the economy lost a day of economic activities yesterday, and to some extent, half of today. So this will not have to flush into the GDP, the gross domestic product for the second quarter of this year, as we have to discount the entire average productivity of the country by 1.5 days. So the impact is quite huge. In terms of monetary terms, the figures will be difficult to place one's hand on, but certainly it will have very negative impact on the productivity and the income generation in the country.
That for time being, or I have monitored issues like this or incidents like this one, it always gets to a point where Labour will want to say, no, we're not going to take this, and meetings will be ongoing. Why do we always have to get to a point where there is total shutdown before government now makes a move to say, okay, we're going to do this, we're going to do that? Can there not be other ways of addressing actions like this one before it degenerates to this point?
My take is that it's failure of or lack of negotiation skills. I mean, the negotiation has been going on. Labour gave it a deadline of 31st of May and said if after 31st of May they're not able to reach an agreement with the government, they're going to go on national strike. And by 31st of May, government clearly knew there was no agreement. So it was inevitable that we're going to witness a national strike. And last night, after 1 day of loss of productive activities, government came back and said they are willing to go above 60,000 naira, and Labour now considered as an acceptable proposition, and is suspending the strike by 5 days. So I think that could have been avoided. Prior to that, 31st of May night, Labour and national and the federal government negotiators could have arrived at that decision that the federal government is going to go willing to go above 60,000. And maybe would have averted this. It's not inevitable that we must allow negotiations between Labour and the government to lead to a total deadlock that automatically lead to the kind of national strike. We can develop or evolve a negotiation mechanism that we know when we get to a dead end and find ways to break that dead end, instead of after suffering losses in terms of economic activities, we now go back to the same decision we could have reached earlier than now.
Oh, a bit of mathematics. I think Labour is saying 494,000 is what they want as a minimum wage. And according to government, they've put pen to paper and they see that will be above 9 trillion naira annually. Do you think this is feasible, considering the revenue challenge of government? Yeah, many will say, well, more money coming in with regards to subsidy removal. But what do you make of this scenario and how it affects government spending at this time?
You know, what I would say is that in terms of the kind of amount that Labour is asking for, I think Labour should also tell us how they arrived at the 494,000 naira they are requesting for. And the government should be able to also tell us how they arrived at the figure they are proposing. If I have to use what I understand about the Nigerian economy, clearly 494,000 naira would be a tough call for the government and even private sector operators to pay. But a 60,000 naira or above 60,000 naira, it's something I would consider as rational. I was thinking that probably the negotiation should have been in the region of 90,000 to 100,000 naira per month, which can be justified by the depreciation of the currency over time. If you say, okay, at the time you arrived at a 30,000 naira minimum wage, what was the exchange rate? If the exchange rate, and then what level of devaluation have we seen in the past 1 year? At the beginning of last year, 2023, the exchange rate, official rate was about the 400 naira region, 420, 427 naira region. If you now move it to something like 1,200, 1,500, you can see you have a threefold increase in exchange rates, which has impacted on price level. So if you're asking for 3 times of what the minimum wage is, and then you're looking at something in the region of 90,000, 100,000, well, that could be understandable, and you can argue and negotiate around that. But to start with the 500 and something thousand to 494,000, I think was quite ambitious on the part of Labour. But for the government also to start negotiating at levels that sounded ridiculous, even though the Labour demand was also outrageous, complicated the negotiation process, which is why I say that the challenge we had is that we have people who do not seem to have good negotiation skills or adopting wrong negotiation strategies that kind of flared up tensions and then led to a breakdown of the negotiation process.
On negotiation, and now government is saying, yes, the tripartite committee is coming together to continue this for another 1 week, I guess. What are your expectations, at least at this time? I think now everyone just needs to be factual. 494,000 naira doesn't seem feasible, according to analysts and, of course, according to government.
I guess right now they have tested each other's strengths. Labour has proven that it has the support of workers and it can shut down the economy.
Yes. So
the government will be now more circumspect in making its offers, and has to make offers that will meet Labour at some point that's agreeable. Like I said, if you are going to negotiation, you must index your logic on some assumption that are plausible, that are logical, and that your negotiation opponents can appreciate the basis of your offer. I think that is what has been missing. So as we speak today, if we are indexing it on inflation rate, we can see what is the cumulative loss in value of the local currency since the last minimum wage. And that becomes the basis for negotiation. Labour should also tell us where are they coming from, what's the assumption that underpinned their 494,000 naira. But I think in the next 5 years, in the next 5 days, in fact, less than, I believe in the next 2-3 days, the two parties will reach an understanding and an agreement. Like I said, we will now, the period of elbowing and trying to prove each other's strengths is now behind us. We now know what kind of damage labor can do, labor actually also knows that the government has the authority of force and might, if they make offers that are completely outrageous, might see a breakup in their rank, where the private sector will insist they are not going to be part of this strike, and private sector employees can actually decide to break the rank of labor. So I think labor will also recognize that it doesn't have an ironclad association. It just has to agree for some level of giving in some areas, or concession, some level of concessions, and arrive at a figure that one will lead to an improvement in the living standard of an average employee, and also still be something that's affordable by both public and private sector operators.
It's also something that is very important here. Let's now look at that handshake, Mr. Chukwu, between the fiscal and the monetary side in situations like this, because many will say government is also trying to be careful. I read in the news that there's another expectation, I think, of a loan from World Bank expected by the Ministry of Finance. So many will say, do you see that handshake, and are we really getting it right with regards to achieving inclusive growth across the board?
Well, if you talk of handshake between the fiscal authority and the monetary authority, the fiscal authority and the monetary authority, I think we've seen some level of improvement coming from where we are under the immediate past government of President Muhammadu Buhari, where we saw a lot of docility on the part of the fiscal authorities. Today, we may not have achieved the tempo or the harmony in terms of policy evolution and policy implementation that we want to see between the fiscal authority and monetary authorities. But there have been a lot of improvement in that respect. Although there are still challenges here and there, we've seen a monetary policy environment that had been very massively contractionary, in the sense that the central bank and the debt management office at the close of last month, end of May, had withdrawn 16.7 trillion naira from the economy. On the fiscal side, we saw a disbursement of about 4.6 trillion naira to the 3 tiers of government, a large part of it coming from statutory, from exchange gain, which has inflationary impact. We've also seen government on its own part at the federal level spending from ways and means funding, borrowing beyond, spending beyond its revenue, so which counterbalances or counteracts some of the initiatives and policy directions of the monetary authority. So there's still a lot of work to be done to make sure that the two of them are pulling in the same direction.
What about your views on the Naira, that's the foreign exchange market? Today we also have a report that there's a bit of Naira appreciates, but it's not really looking like what it is. It's still that flip-flop in that market. Can we wrap up on that note? What do you think? When are we getting to address this disparity that we still see?
If I say this, it will be very, it will sound uncharitable, or it will sound as a scaremongering. But the fact is that Nigeria will continue to witness foreign exchange pressure for the next 10 to 20 years. We still do not have the industrial base and the export base that will generate sustainable foreign exchange revenue that will meet consistently our import needs and other foreign currency obligations. And our population is increasing at about 223 million now. That population size will require some level of consumption. Part of those consumption will inevitably be foreign goods or foreign services. And without a growth, a material improvement in our industrial capacity, productive capacity to produce what is exportable, then the country will, in the near to long term, continue to suffer some level of effects, supply challenges. Today, we are producing about 1.2 million barrels of crude, 1.28 million barrels of crude. It's not sufficient. Even if you move to 1.5 million barrels, which is our OPEC quota, or even the 1.78 million barrels as projected in the national budget, we're still going to have, at sporadic intervals, where oil price will come down, and then we suffer the decline in our foreign exchange earnings, and we go into some challenges in effects. So we need to develop an industrial base that will ensure that earnings from crude oil will no longer account about 93% of our foreign exchange earnings. If we begin to see where income from crude oil account for 30-40%, and we have goods that are value-added goods that we export, then that's when you have that stability. But we don't have that base, and that base will take some time to construct.
Mr. Johnson Chuku, it's really a good one. I must thank you so much for your time. It's always good to have you join the program. Mr. Johnson Chuku is the founder, managing director, Cowrie Assets Management Limited. Thank you so much, and do enjoy the rest of your day.
Thank you for having me.
All right, there. Well, we're still staying with this topic.